Good afternoon, everyone. I'd like to welcome you all to the Halftime Talk feature interview. And I'm delighted today to be joined by Stephen Barsamian, who is Chief Operating Officer at The Tank Tiger, based in New Jersey. Thanks so much, Stephen, for joining us.
No, thank you for having me.
Great to have you. Well, it's certainly a very interesting time for markets in general, the energy markets. And let's delve right into sort of oil storage dynamics and get your sort of big picture view on how developments in the last month, more or less here, at least in the Middle East, around the Red Sea area, and how that may be related to how storage users are viewing the market today in terms of flows, in terms of needing to store more or less. What's your impression from the storage tanking point of view on how the market is taking these pretty volatile geopolitical events that we're seeing unfold?
Yeah, it's crazy times for sure. It's definitely caused quite a stir globally. Here I'm based in the US, it's where a large focus of our business. Um, we are a tank storage marketplace. So we have customers that need storage and we have terminals that have storage, and we kind of work as an intermediary with our online platform to find suitable matches. Essentially, with the Red Sea activity, that has caused quite a disturbance in supply chains and caused markets to kind of go into a backwardated sense shortly. But really, it here in the U.S., we've seen on the product side at least quite a surge in storage activity for gasoline and distillate. In the Middle East, we haven't really tracked anything unusual. Flows are still being able to get out, even though it still seems like the activity hasn't ceased, and there's still a disturbance over in the Red Sea. And in Europe, a lot of storage was quite leased for pre-war activity to hold inventories, and it seems to be the market's still tight in Europe as well, even though there is hints of backwardation in the market. So in storage market, pretty much everything is configured by backwardation and contango, and I'm sure your listeners understand what that is. Here in the US, it actually seems that we've had some contango on the distillate side and on the gasoline side for a little bit, but crude, on the other hand, has still been backwardated, and the Red Sea events have definitely affected that backwardation as well. So it was flipping back and forth, and I think it still will, but for now, yeah, that's kind of what we're seeing.
Okay, and I mean, as you said, it does flip from one to the other. But I mean, would you say that the sort of geopolitical situation we have, and not just here, but also in Europe, of course, that's settled now in terms of the Russia-Ukraine war. The last 2 years, the market has settled into a new flow. The storage industry, I'm sure, has kind of also settled down to know where things are being redirected to, etc. But from a capacity point of view, do you think that generally the market, whether it's in the US or other regions, is ready to take on any sort of last minute increased demand in storage because of sort of panic of having just in time and having enough essentially enough in storage for whatever users want?
Yeah, that's a good question. So any incremental storage is going to be tough for a customer because a lot of the tanks here in the US, at least, are leased in the major hubs, Houston and New York Harbor, for products. So if you already have tanks and you're not using them, you can obviously, have a cargo, fill it up. And inventories have been higher, been tracking higher both on gasoline and distillate here in the US. They've been pretty much not unusually high, but higher than they were at this point last year for both products. So it is definitely getting tighter from an inventory standpoint and from a storage leasing standpoint. Where, I mean, if there's no tanks available, it's you can't really come in and lease a tank. So yes, that's from that standpoint, it would be interesting to see, you know, how many cargoes come here to the US and on the product side. On the crude side, there's still a lot of availability, at least here in the US, in and in the Gulf Coast and in the Caribbean. There's plenty of storage to add. So, but we really haven't seen that kind of uptick in cargoes getting diverted here, at least yet.
Okay. Okay. And I mean, when you look at, let's look a bit more long term in terms of the investment that's going into increased storage capacity around the globe, whether it's in the US or elsewhere. Would you feel that you've sensed any difference in the appetite for that in the last year or 18 months because of the interest rate scenario, because of the cost of obviously investment of anything, including, you know, expanding oil storage infrastructure? What's your sort of sentiment on that front in the market, or are people continuing to invest as they were planning?
Yeah, that's a good question. I mean, obviously, a lot of long-term projects have been planned and, you know, are still in the development phase, you know, regardless of the interest rates. You know, in the Middle East, Fujairah is a big hub for storage, and it's definitely keeps expanding with the trading activity around it, and you know, more tenants want to be there in that hub. Stateside here in the U.S., you know, obviously interest rates have affected, you know, new builds, and it makes it harder to, you know, expand and justify the capital costs. And customers, you know, at least from their standpoint, you know, it's harder to buy inventory because the cost of capital is higher. So it's less incentivized for them to take storage because they don't want to have the inventory cost. So yeah, it definitely affects things. And from our standpoint here in the US, a lot of the growth domestically for storage was based on the US production. And that's still growing, but there was a
Yeah.
lot of midstream overbuilding to essentially catch up to that production, and it kind of got overbuilt a little bit. So we're still waiting for production to catch up to the midstream building. And then we had the growth in the Mexican export market here in the US, which was a lot of building for rail capacity to ship to Mexico and tanks along the border. So that kind of was the midstream growth for tank building. And then here in the US, we also have, you know, a lot of new builds on the chemical side, but that's not as much, you know, relevant to our discussion. So yeah, I would say, you know, interest rates overall definitely put a damper on people's willingness to spend capital for sure.
Okay, and that's interesting. You're saying the midstream was overdone, even though we did see last year sort of a bit more production from the US than the market was expecting. And as you said, that's increasing, and it's expected by all means to continue to increase, even though at a slower rate. But from a storage market point of view and midstream market point of view, so that overbuilding, as you said, that overcapacity, are the owners of that confident it'll be all put into use in the year ahead, or do they see the US production side of things not being so consistent or reliable?
Yeah, I think so. I think people are still bullish on the production side, and definitely the midstream operators are still bullish on it. And we've definitely seen, you know, exports uptick, and you know that with exports you need tanks and you need pipeline takeaway capacity. And we've had large acquisitions in the Gulf Coast over the past few years with you know, Gibson's and Enbridge buying large terminal facilities with export capability. And there's still projects out there to this day that are in the works to develop a VLCC export facility, a fully laden VLCC export facility. So yeah, I think the market's still bullish. I think they think production will keep growing, as you know, as long as there's no pandemics or any crazy you know, effects on the oil prices. So yes, I'd say as a whole, definitely still bullish.
Okay. Just, I mean, looking a bit, I know that you're based in the US, but you mentioned Fujairah, and I just wanted to get your take on that. I mean, there is obviously there's a big crude storage project being led by ADNOC in Fujairah for 42 million barrels of crude, I believe, different phases of that being built. Do you feel like from a regional point of view here, where I'm based in the Gulf, that the storage situation is healthy? Meaning, how balanced does it look? Do we have too many ports, too many players trying to increase and build storage and competing? Bearing in mind, obviously, that you have a very developed market in Singapore. So where do you see the Middle East fitting in from a regional sort of role on the storage pipeline, if you like?
Yeah, I think both crude product bunkering, it's kind of like it's a self-fulfilling cycle almost, as more ships and stuff activity come through the area that, increases bunker traffic, which requires more tanks to fulfill that bunker need. And products in the area is growing. Just gasoline blending is becoming a very big hub globally for gasoline blending. And then like you mentioned the crude exports. I mean, that's the bread and butter of the Middle East is exporting crude. We've seen very large terminals in that area in Oman and stuff. So it's definitely, I don't think it's underbuilt. I think there's still probably more capacity to be built through the years, in my guess. As I mean, most of the majors are almost always already there, but as arbitrage opportunities come up, potentially more players enter that marketplace as well. And essentially, when you need to trade, you need a tank. So that always kind of artificially creates demand for tanks as well.
Okay, great. Yeah, and of course you've got a big crude storage project in Fujairah, but of course on the Middle East, the other growing area, as with Asia, is refining. Unlike in the West, where the refining industry is sort of either shutting down or dwindling, or to various degrees. Obviously, Europe is not doing great, but you're seeing any expansion, of course, here and to the east of the Gulf. And again, that I presume would be focusing, in turn, a lot of attention on increasing storage capacity. Let's talk a bit, Stephen, about again, sort of looking forward a bit more. There's a lot of talk always about peak oil. Some people say it's going to happen in 2030. Others say it's way beyond that, not till 2040. But in terms of how that, and of course, the move towards, low carbon fuels, sustainable fuels, those sort of two schools of thought, how are they impacting thinking and investment in the storage tank market? Does it? Are you having to are operators having to really think ahead pretty soon about how they can reconfigure what their tanks can take?
Yeah, that a lot of good points there. Peak oil obviously has been thrown around since the pandemic a lot, and I mean, from my side of view, we haven't seen any real action towards that. So I kind of kick the can down the road.
Yeah.
In terms of renewables, I mean, that has been I can show it. So we have with our storage marketplace, we have real world actionable data insights, and through our data, we've been able to show a trend of a large uptick in activity on the renewable side for storage demand, and it is quite considerable. And large oil major companies that did not participate in this pre-2020 are very big customers now, taking out large positions for renewable feedstock, renewables, and pretty much now anybody that was, that's in oil has some sort of exposure now to renewable fuels. So it is grown exponentially in just a short period of time of 3 years. And we've seen it from, just not only a storage side, but from the plant side. A lot of big companies are doing these joint announcements with, either supply or building new plants on existing grounds for terminals. So I guess I should have said in my interest rate on capital, renewable is definitely seen an uptick in demand for storage, and where you're seeing a lot more new builds for that, as well as potentially old fuel oil tanks that don't have a customer or home have been converted
Hmm.
to biofeedstock service because they have heat, they have that capability. So for here, us in the U.S., a lot of the biofeedstock is coming in via import from overseas, whether it's Asia or Europe as well. And with that, you need tanks to facilitate that transition from tank to rail car or barge or whatever that transshipment method. So yes, at least here in the U.S., we've seen a large and it's definitely considerable uptick in storage demand for renewables, and I think Europe as well. But the capacity might not have. They'd have to build it, to be honest. It seems like they were already ahead of us, at least in terms of that. And they might need to invest in more infrastructure. In the Middle East, I can't say that I've seen that kind of growth that we've seen here in the U.S. Yet. And you mentioned the different types of renewables. You SAF, which is probably
Yeah.
the smallest of the markets so far that we've seen, just because purely on demand and production, hasn't overtaken any of the new. I'd say renewable diesel is growing very rapidly as a drop-in product. And biodiesel was always there, ethanol was always
Yes.
there. But from us, it's renewable diesel and biofeedstocks is probably the highest in demand. And the biofeedstock world is, animal fats, it's used cooking oils, it's palm oils, it's veg oils. That's kind of what you're talking about with the biofeedstocks. But to answer your question, yes, definitely we have seen a large commitment to bios and renewables here.
Okay, and what about again, I mean, can I ask you a bit about China? I know that's not your market again, but I mean, again, obviously a huge consumer of energy and a huge importer, clearly. I've got the crude side, obviously, and its storage and inventory there. But even on the product side, it's also, quite significant exporter of refined products. It's also making a big move and more into petchems and sort of taking a lead on that front. So bearing all those things in mind, again, how is the Chinese storage market, if you like, uh, um, developing going forward and transitioning?
Like anything, they're very opaque, so it's
Yes.
tough to gauge. From their standpoint, they don't really lease third-party tanks like other regions, like the Middle East and Europe and U.S. So Singapore is really the big hub in that Asian market for storage with a lot of third-party terminals. China in general, obviously, they have large inventories for crude. And like you mentioned, they're growing the refining hub and their petchem hub. So you're seeing a lot of those products flow out into our markets. And it's definitely, I mean, we've seen it from the petchem side here in the US, a lot of imports from Asia coming here and to the West Coast in the US for products at least. Because a lot of West Coast refineries in the U.S. have gone down over the years
Hmm.
recently, so we've seen a lot of flows come here as well. Um, I mean, they're obviously a huge buyer of U.S. crude. Um, with the Panama Canal issues, that obviously hurts things, but in general, they're a very large buyer of U.S. WTI. Well, it'll be interesting to see with the Trans Mountain expansion in Canada to see if the Western Canadian Select barrels go to Asia, and if they're able to process that kind of heavy crude now that it's able to go on the West Coast. And Venezuelan barrels, that's here in the U.S. and the
Yeah.
Caribbean. That was a big, you know, they were a big buyer of it prior to everything going down in Venezuela. So with Venezuelan upticks in activity, you need more storage in the Caribbean to transship it. So that could be interesting to look out to see if more barrels come out of there. And Guyana, they're a very large producer and starting to take away some of Venezuela's market share. So that would be another
Brazil?
one. Brazil, yes,
Brazil?
yes,
Yeah.
yeah. Brazil has always been a traditional big player as well. So you'll have to see, where those cargoes go and, go into the tanks. I mean, China is obviously one of the largest buyers of crude in the world. So definitely will be interesting to see as they keep developing their refining capacity, where more and more of the crude flows, and if they look for
Yeah.
more complex refining capabilities of buying heavy, like the US Gulf Coast is probably the most complex refining capabilities in the world with taking lights and heavies. Let's see if China kind of models that as well.
Okay, Stephen, just one more question for you. We haven't mentioned Russia specifically, and I just wanted to get your take also on how, I mean, we have mentioned it in a sense of geopolitics, but the last 2 years of the war there with Ukraine, obviously a huge redirection of Russian energy in general, crude products, etc., still making its way to market all over the world, officially, unofficially. Has that kind of knocked the storage market globally sideways, or do you think that adjustment happened very quickly? I mean, what impact do you think that's had? And now we're 2 years into it. Any further sort of thing that the market might be looking out for?
Yeah, I mean, obviously it had a large impact initially, especially in Europe, where they were such a big feeder system for European, inventories for, products. I mean, to my knowledge, there's still sanctions. So it's definitely making its way to but I mean, I couldn't tell you how it gets here, but it's definitely still flowing through the world. And I mean, there's obviously a reduced presence of Russian companies, oil companies, at least. They used to have big offices in the very large trading cities, and their presence has kind of shrunk with employee count. Most folks have gone to other jobs. But obviously the barrels continue to get out, and they're flowing out. And so it seems like, it's kind of adjusted itself since that in our early years. I couldn't tell you where the cargoes are coming from, but here in the US, I know of no Russian entities that are bringing products in from Russia, at least. I mean, they could be trading other cargoes,
Through
but
somewhere. Yeah.
yeah,
Yeah.
yeah. So yeah, I mean, it definitely seems like the barrels are still getting out and still flowing, and it kind of, even everybody was obviously very afraid of global refining capacity with the shortage, but it seems like that's kind of self-corrected itself. And I mean, now here in the US, we've have inventory builds of products, so that wasn't the case, early 20 early early part of the war. It was just, very, I mean, we were at historic lows in inventories.
Yeah.
And so I think that's kind of changed recently, and so it definitely seems to be kind of stable and more normal, I'd say.
Okay, Stephen Barsamian, Chief Operating Officer of the Tank Tiger. Thanks so much, Dave, for joining us on Halftime Talk.
Oh, you're welcome, and thanks again for having me. It was a pleasure.